Swiss CPI numbers came in and they are shocking, coming out completely unchanged at 0%. Swiss retail sales were down, however, coming out at minus 2.5% and missing their forecasted number entirely. US core monthly price index came out just 0.1% below the forecast at 0.2%. Reminder, tomorrow is a major news event. US NFP numbers and unemployment rate, as well as the Canadian unemployment rate, are coming out tomorrow morning, so be sure to tune into the A1 Trading live stream to watch the event live. Now let's check out some currency crosses. All right, so here we are in the Edge Finder, and I want to start off first by taking a look at the market heat map so that we can see our biggest movers of the day so far. So for our major US pairs, USD JPY seems to be down, wow, minus 1.59%, so yen down heavily today, whereas the pound dollar pair is up 1.69%, so that's up pretty heavily as well. NZD USD up 1.3%, Euro USD almost up 1% coming into today. The indices have had a little bit more movement so far over the past couple of days. There hasn't been a whole lot of change. We've had like maybe one go a little bit down, one go a little bit up, and then the middle ones kind of remain neutral. But here today we have the German 30 and JP225 up 0.87% and 0.92%, whereas the US 30 and the S&P 500 and the NASDAQ, or excuse me, US 30, S&P 500 and NASDAQ 100 are all down today. So US indices are down. UK 100 hasn't really moved, but the other major foreign indices are up today. Euro pairs are looking kind of split. Euro CAD up 1.19%. Our pound pairs are doing pretty well today. So pound pairs are doing well. Yen pairs, not so much. Swiss franc kind of split. Same with the Australian pairs. They're kind of split here. And New Zealand pairs overall are looking like they're up on the day so far. So quick little recap there. We can go ahead and see which way some of these pairs are moving. If we go into the Scorechart Summary, there's not a whole lot of change here. Still New Zealand running the show. NZD CAD, strong buy, score of +6. I'm sure that if we go down here, we'll have the same three. Yep, Euro NZD, Aussie NZD, GBP NZD. Still our strongest sells. Oil coming in as our only other true sell with a score of -4. We have some yen crosses, Aussie yen, pound yen, as well as Euro AUD, GBP USD, and USD CHF coming in at -2 scores. So leaning towards sell, but haven't crossed that -3 score threshold to get the official sell score. Are you interested in our market scanning software, the Edge Finder? You can try it today for free. Click the link in the description and fill out the form letting us know you're interested in the software. A member from our team will contact you with trial access information. The Edge Finder has brand new features like price forecast and economic news. There has never been a better time to try out the software for yourself. Click the link in the description and try it out for free today. Have a couple buys up here. Aussie CAD, CHF JPY, NASDAQ 100, US 30, German 30 all have scores of buy along with all of these New Zealand dollar crosses here. So you know what? We have been looking at nothing but currency pairs, and we have been looking at a lot of New Zealand dollar pairs. And, you know, the New Zealand dollar has just held a lot of weight at the moment. It seems very bullish at the moment. We've been taking a look at a lot of currency pairs. So how about we take away our currency pairs, our indices and commodities here. We have the German 30, US 30, NASDAQ 100, and S&P 500 would all be something to take a look at. And then oil is something that we could also take a look at. Gold here is pretty much neutral, has a buy score of +1, which is really not leaning towards one direction or the other. But oil does actually have a sell score of -4. And we haven't taken, I can't remember the last time that I took a look at oil. So why don't we check it out? See what's going on with oil. Of course, with oil, I should mention that under our fundamentals section here, we do just have US dollar numbers because oil is not really a currency. And a lot of times people compare it to the US dollar, US oil, you know, things like that. In fact, we can see here in our COT data, we do have it listed as US oil. and we're crossing it against the US dollar again. So we are going to get some US dollar information, but we can just kind of see what's going on with oil for a little bit. So score of -4 and our COT data comes out to a score of +1. Retail sentiment, on the other hand, is a score of -1. So institutional traders are heavily favored long on oil, 82.47% long oil, 17.53% short. And then, of course, I guess I'll just go ahead and go over the US dollar numbers here as well. 72.9% long and 27.10% short for the US dollar. Retail sentiment, on the other hand, just barely crossing that 61% threshold to give us the official -1 score here. 61% long, 39% short. Our seasonality, if we take a look here, we can see that in the last 10 years, last 10-year average and last 5-year average, historically speaking, in the month of November, oil doesn't do too well. We can see that it typically finishes worse off than it came in the month of November, and that seems to be the case in the month of December as well. For a second, I actually forgot that today is December 1st. So we are no longer looking at November, we are looking at December. It is December 1st, and that is still true in the month of December. In our 10-year and last 5-year averages, we can see it sitting below this zero neutral line here. And so again, what that means is that historically speaking, when this whatever price point whatever price point oil comes in at to start the month, it typically finishes off worse than that, lower than that by the end of the month. And our trend reading is definitely showing that here. We can see that all the way back to November 11th, we've had pretty much nothing but downward momentum up until, I guess you could say, November 25th. And then we had a little bit of retesting coming back up to this high point here. And the price forecast does predict that it is going to continue to trend downwards. However, if we do break above this high, potentially we could get a little bit of retesting and see a little bit of a reversal. Our trend reading score is only a -1, not a -2. A -2 would be that this market is very clearly and obviously heading in a downward trend. A -1 score means that yes, it is currently trending downwards, but of course things can change based on news events or based on a number of different things. But we'll finish up with our fundamentals: GDP growth, inflation, unemployment, and interest rates. GDP growth score of +1, inflation, unemployment, and interest rates, all scores of -1 here. Again, and we're not really comparing, typically we compare these against other currencies here, but since there's no other currency to compare it to, we're just going to look at US dollar numbers. US GDP growth is at 2.9%, US unemployment 3.7%, US inflation 7.7%, and US interest rates are at 4%. Now, because we take a look at a commodity, perhaps we could take a look at an indice as well, the S&P 500 or the NASDAQ 100. Perhaps NASDAQ actually does have a buy score of +3. So just for fun, why don't we take a look at that as well, NASDAQ 100. So here in the NASDAQ, and I believe this is the case for all of our indices, yes, we have this updated look to the page, similar to our gold page actually. You can see here, it looks similar for gold. However, we're not looking at gold, we're looking at the NASDAQ 100. Buy score of +3, COT data and retail sentiment are both neutral, and we can see here, NASDAQ so far, institutional traders are practically 50-50. They're split on this, 51% long, 48% short, really not leaning one direction or the other. Retail sentiment, on the other hand, is so close to crossing that 60% threshold to get an official buy or sell score. Being 60% long would give it a sell score here, but because we haven't crossed that 60% threshold, we're still sitting at a neutral score here. Seasonality is a score of +1, and both, again, I'll mention November and December here. Historically speaking, both in both of those months, this the NASDAQ tends to perform pretty well, coming in or finishing out higher than it came in at, which we can see in our current year average was the case last month. And so historically speaking, if it follows that trend, that will be the case this month as well. Our trend reading is a score of +2, and we can see a really strong, in the last 2 days, really strong upward move for the NASDAQ there. So our price forecast predicts that that will continue to be the case. And if we look at our fundamentals here, split GDP growth and inflation, +1 scores, unemployment and interest rates, -1 scores. And this is something that I love with this new updated indice and gold look. And it's similar to what we have here in our Fed tracker section as well, are these arrows that make it super clear and obvious how a certain metric affects the price or the trend of whatever you're looking at. And of course, I want to note that these correlations are not perfect. They are instead general observation. For example, if money supply in the US increases, we have noticed a strong correlation in the rising price of stocks. This could change in the future, but it's something that we monitor closely. So of course, what we're saying here is, typically speaking, this tends to be the case. Now, that doesn't mean that it's the case 100% of the time, but the majority of the time, for example, assuming that the U.S. economy is doing better, GDP growth is going up, that's going to be great for stocks and great for the NASDAQ 100. Inflation, on the other hand, as inflation gets higher, that tends to not do as well for stocks down. That doesn't mean that, you know, if next month inflation rate were to rise, but so would the NASDAQ, that could happen. But historically speaking, and based on the data that we pull in, typically speaking, as inflation and unemployment and interest rates, as those things continue to get higher, stocks and indices like the NASDAQ 100 do not do as well. So again, these are all the same numbers that we just looked at with the US dollar, our GDP growth, inflation, unemployment, and interest rates, all the same thing here. But these arrows give you kind of a nice little signal of which way this will continue to trend as these numbers change. Now we're going to watch some stream highlights featuring TraderNick and Miko.
What's going on with XAU USD here? Look at this, you guys. Big shoot to the upside, just barely missing that. Or no, it hit it. It hit 1800 this morning. That is wild. So a big push to the upside, and I'm currently long equities and gold as well. So this is a pretty good spot to be in. I don't have gold open on my Oanda account because in the US we can't trade CFDs, but I have it in my stock market account, which I can show you guys that just so you know I'm not capping with you. No cap streams. Maybe that's what we'll call the streams. So let me show you. GLD, I got gold open on this one. So this one's floating pretty good. GLD up $227 and VOO up $1,800 on that one as well. So these are running hot. Good little trades on the S&P and the gold market currently. So yeah, my thought process with this, with gold, is this thing, it's not necessarily that I think it's, just all-time bullish and it's going to rocket to the highs. But I think right now what you're getting is a beautiful trading opportunity off of the back of yesterday's Fed statement from Jerome Powell, as well as just generally a back off on the hawkishness from the U.S. Or from the U.S. Federal Reserve, right? What caused the gold market to be so negative was super high interest rates coming in hot every single time. And then also, of course, a very, very hawkish Fed that was sort of terrifying markets. And to be honest, still could and still is sort of doing that. We're not out of the clear by any means. But we're seeing a bit of a back off in that tone, which is giving plenty of room for stocks and gold to rise. In my opinion, in the short term, I'm going to ride this train. You guys know my style. I am a trend follower. I'm going with what's happening. I'm not trying to predict what's going to happen next, right? The problem with trying to predict what's going to happen next is you'll find out real quick, man, I don't know what I'm going to do next week. How am I supposed to know what the financial markets are going to do next week, right? I might have an idea, I might have an opinion, but trying to bet my whole account on my opinion is going to result in me blowing my account. I react. to markets. It's what I've been doing for years, and it has been so much more clear. There's so much more clarity in just following what the market is doing, in my experience, than trying to call the next big shot or call tops and bottoms and reversals and stuff like that. So when I'm looking at gold, here you have a big run up. We have our swing low to swing high. That gives us from 1745 up to 1800. Our fib levels come in at around 1780, 1779 to be exact. So I think at that point, you might get a little bit of an interesting point of view, right? If you do get a pullback, if you're long biased on gold, that might be a spot to look at. But this is a huge breakout for gold. This is what we were talking about for a while with gold. Is we were stuck between the top of this range around 1800 was where we thought we could get to if we broke out. The top of this range, that 1780 mark, and the bottom of this range, which happened to be right around 1740, 1735, this bottom area here. What we've noticed is that in the last 24 hours, we've seen a huge rush to the long side on gold. And by the way, the stock market as well. The same thing that's causing the stock market to rally is causing gold to rally, which is, of course, the less hawkish comments from Jerome Powell. Now, this is not dovish comments. He's not saying we're going to cut rates like crazy. This is just less of that super intense, we're going to raise rates until you can't see straight conversation we've been having for the last year, right? Which is why we were so long biased on the dollar. Since then, we've paused, right? I know Ivan has also talked about that a lot as well. We've been on the sidelines with the dollar, not trading it too much. But I've been bullish on things like the S&P 500, and I've talked about that many times. I've showed you guys my trades on that. I've also been trading US 30. That one's been great. We are catching this move, which is awesome. And of course, Euro New Zealand benefits from the same factors. Believe it or not, Euro New Zealand is a risk off, risk on currency cross. You have Euro, which is generally considered nowadays as a risk-off currency, versus the NZD, which is like the highest of the risk assets. I guess you have Aussie and CAD as well up there. But generally speaking, the New Zealand dollar is going to do well in an environment in which stocks are doing well, where the dollar is falling. Not always, but in many cases. And that's what we're seeing right now. The euro is weakening relative to a very strong New Zealand dollar, which is causing a great little trade for me on this trade alert that I shared inside of the Discord.
You can see the DXY is currently melting to the downside. We were discussing this chart on my stream earlier today, and it looked like we're probably going to get moved into this level of support, which the market is smashing into now. We well could actually break through. I mean, the second area I'll be focusing on is down there as well. So there could be a lot more downside for DXY, which obviously means Euro USD, Pound USD. These guys could be looking to fly. But overall, I'm still kind of bullish on these pairs. So I'm just looking for some pullbacks and retracements for them. Same thing for Euro, same thing for Pound. I'm going to be looking to see if we can get that reaction from that monthly time frame for Euro and for Pound on these levels, but I need to see that break of structure in the 4H time frame first before I start doing any shorting for them. Long term, they are still in very bearish markets if you look at the bigger picture and where we're trading. But if you look at the current price action, which is traders is what we're focusing on, everything is pointing to the upside for these ones. So I'm only looking to buy until we get that break of structure. But yeah, the pairs I'm looking to see what we can do with the yen pairs. I'm looking for shorts on them, Euro yen, Pound yen. I'm looking for shorts on these guys to come back into this level. I'll go for Euro yen in a second, but Pound yen, I'm looking at some shorts. I was looking at some shorts this morning, but it looks like we crept back above this key level. This is a really key level I've been focusing on for Pound yen at 165.500. Key level resistance, support. Bit of a fake out here to the downside below that level, crept back above. And now it looks like the market is retesting. It was just about breaking through. So I was looking for the retest, didn't get any confirmations that actually short. Market just rallied straight through. And now it's closed back above. So Pound yen for me is back inside the range. I'm overall still looking to short the pair, but I do want to see the market creep back below 165.500. Force some shorts into this low. The target is pretty self-explanatory. Looking for the market to come back to where it came from when it last broke through the level. If I'm wrong, I want to see the market break through these highs and then basically going to do the flip side back to highs on the retest of 169, back up into this level here. So Pound yen for me, pretty clear in terms of the highs and the lows and the structure that the market is creating. Two key levels here I'm looking at. Inside this area for Pound yen is a little bit hit and miss. It's a little bit sideways. And frankly, I'm not too keen on trading in that area. So I want price to show me the direction, give me the breakout, give me the retest, and I'll be happy looking to trade this pair either to that price swing high or back into the low. Now the market is still bullish on the high time frames, so the market will favor the buyers with this one. We might see a big swing to the upside and break through those highs. Perfectly fine. You know, we'll still look to take advantage of that upside move. But in this area for pound yen, I'm not too keen on getting to trades. We might see the market come back down underneath the level, but I'll just be waiting for us to get that break.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.